Hi to all you brilliant home buyers and resourceful refinancers. That's a tongue twister. Resourceful refinancers. We know you guys are smart. That's why you watch our videos. In today's Red Friday video, you're going to become even more smart, more educated, because we're going to go over overlays. First, we'll cover what they are and why lenders use them before diving into what I consider to be the three most common types of lender overlays you're likely to encounter when doing a VA loan. As you know, it's Friday. Why? Because I'm wearing red. It's Red Friday here at Low VA Rates. If you'd like your own Red Friday swag, all you have to do is go to our YouTube channel, search in the search bar, Friday swag or Red Friday swag. We've got a whole video on how you can also get your own really cool red shirts and support the veterans like we do. Okay, thanks for watching. We're going to get into overlays today. Let's talk about what they are. What are overlays? Okay, what are they? Like using my whiteboard today, all VA loans have certain rules and guidelines that the lender must follow when evaluating a potential veteran for a VA loan. Now, these guidelines are set by the Department of Veterans Affairs since they run the VA home loan program. However, one of the big benefits of getting a VA loan is that their requirements tend to be more minimal, more flexible than other loan types. Even though the VA keeps their program rules quite broad and open, they do allow lenders to set their own additional requirements, and that's what we refer to as overlays. Now, why? Why do lenders have these overlays instead of just sticking with the VA's guidelines? Well, first off, many lenders, like Low VA Rates, do try to stick just to the VA's requirements with either no or very minimal overlays. However, there are two main reasons why a lender might choose to add an overlay. Let's talk about this. We already answered what they are. They're additional rules. Why? The two main reasons why lenders might want to add an overlay is number one, they want to limit the risk by not lending to borrowers who are more likely to default. So, lower risk. It's important in the mortgage world. Number two, they need to be able to sell the loan to an investor on the secondary market. Ability to sell. And we're going to say sell servicing. We've been educating you guys a lot lately, and we have a video that you've probably seen about the difference between a lender and a servicer. Well, we need the ability, lenders need the ability to sell the servicing rights to your loan quickly after closing. Now, Low VA Rates thinks that there are better ways to determine someone's credit risk than just using an arbitrary number like a credit score or a FICO score. However, in the spirit of full transparency, we have had to temporarily add a credit score or FICO overlay because of certain investor or servicer demands due to the coronavirus. Should be gone soon. We're almost out of the woods, I hope. But now that you know what overlays are and why they happen, let's talk about the three most common ones that you're likely to encounter when we're looking for a VA loan. We're going to get right into this list of the three most common ones. Number one, and I just alluded to that a second ago, credit score overlay. We're going to talk about this. This is probably the single most common overlay on VA loans. As we've taught you guys many times, while the VA itself has not set a guideline for a minimum FICO or credit score, many lenders have set their own. Basically, lenders have a hard and fast rule that says they're not going to give you a loan if your credit score is below a certain mark. Very popular, anybody below a 640, anyone below a 620, those are very typical credit score overlays. Now, a low credit score doesn't inherently mean that you're a big risk. So it is worth searching for a lender who doesn't have credit score overlays. At the time of filming this video, early 2021, we do have a credit score overlay on VA purchase loans here at Low VA Rates and on VA cash out loans. We have no credit overlay at all on our VA streamlines. And the only reason we have one right now is because of coronavirus has made it so that the people that we normally sell our servicing to they've all incorporated temporarily a minimum credit score overlay, so we've had to follow suit. I am very confident as the president of low VA rates, it will be gone very, very soon. Number two, okay, most common, number two, the number two most common overlay is a DTI ratio overlay. We've talked about DTI, which is also known as your debt to income. Now, overlays on the DTI requirement usually occur as like a cap on what your debt to income ratio can be. Basically, the lender has created a rule that says they're not going to lend you money if your DTI ratio is above X amount. You know, we've seen people go as, say if you're over 40%, we're not going to do it. Maybe somebody says 50%. Here at low VA rates, we have no DTI overlay. But some lenders, I don't want to mislead you, I'm not saying that I know what each lender's rule is, but many VA lenders out there will have a DTI overlay. Like with the credit score overlay, the VA does not have a minimum DTI requirement. That's why we're calling it an overlay. Instead, their DTI requirements are actually very flexible with additional scrutiny, no cutoffs for DTIs over 41%. I've personally seen here at low VA rates, DTIs up in the 60s get approved for a VA loan. That's a video for another time. Third and final, top three overlays on a VA loan is foreclosure, hopefully I'm spelling this right today, or BK, all right? BK is bankruptcy. If a lender has an overlay related to past foreclosures or bankruptcies, it's usually going to appear as additional time that you're going to have to wait before you can get another VA loan. Now, the VA's rules for getting a new mortgage after foreclosure or bankruptcy are very easy to follow. Okay, it's 1 year wait for a Chapter 13 bankruptcy. It's a 2-year wait for a Chapter 7 bankruptcy. It's also 2 years for foreclosures, short sales, and deeds in lieu of foreclosure. So that's very specific. If a lender requires you to wait longer than what I just suggested, then this is because they have an overlay and they're likely considering you a bit more risky and they want you to wait a bit longer. So what to do if you're denied a VA loan because of an overlay? Well, I'm going to put it real simple. Call low VA rates, or at least shop around. Not all lenders have the same overlays or even the same cutoffs for specific overlays. So if you've been denied by one lender, there's a good chance that you could still qualify with a different lender. However, the best thing to do is to try to find a VA lender who either straight up doesn't have any overlays or who has minimal overlays. Right? Us, low VA rates, are very minimal. The only overlay we have right now is a COVID-induced, probably shouldn't have coughed without my mask. Sorry, making fun of this whole thing. But the only overlay we have right now is a minor credit score overlay, which I'm very confident should be gone by the middle of 2021. So listen, guys, thanks for watching. You now know more than all of your friends and all of your family, unless, of course, they're watching too. Keep watching. Tune in every Friday for more tidbits and facts on how you can become better prepared to buy or refinance a home when you're ready. And when you are ready, guess what I want you to do? I want you to call us here at Low VA Rates. We've got a toll-free number. You can live chat with our agents. You can apply right online. We're easy to get a hold of, and we're looking forward to hearing from you soon.